Well, good Monday morning and welcome to Connect, the California MBA's weekly podcast featuring one-on-one interviews with movers and shakers in the mortgage industry. It's March. We're about halfway through, a little bit more than halfway through the month here, and we're talking customer experience this month. And so I'm excited to jump into the conversation here with our guest in just a minute. But before we do that, let's thank our sponsors over at Accelerate. So if you're looking to close out more loans in 2021, whether that's purchase or refi, make sure to experience Accelerate's award-winning customer engagement platform that features lead management, CRM, call routing, sales enablement, marketing automation, borrower engagement, and data intelligence through innovative use of multi-channel marketing, which includes text, social media, email, direct mail, phone, ringless voicemail, retargeting, and more. And again, as I always say, make sure and follow Josh Friend on LinkedIn. He's got a lot of great content. He seems like he's on every webinar in the country right now. But he's got a lot of great things to share with the industry, so make sure and follow him there. And if you want to schedule your own personal demo, make sure to go to accelerate.com and you can take care of that there. So before we get into the conversation, I want to toss it over to Susan Milazzo, our CEO, for this week's update. Susan.
Thanks, Dustin. Hi, this is Susan with the California MBA. And this week, I'd like to talk with you about our Mortgage Innovators Conference that's happening in our virtual environment on May 4th and 5th. If you check out our website, we have just announced our draft agenda. We'll be updating that with new sponsors and speakers as we get them confirmed, but we are very excited about what we're offering this year. Remember that this is the one place that you can go to hear the most innovative minds and companies in the mortgage industry. You'll have some practical takeaways to be more efficient, connect with your customers, better execution and delivery, and of course, build those customers for life relationships that we're all looking for. We've also got some great prizes coming up for registrations that are coming in early, so don't delay and get your registration in so you might be one of our lucky winners. I want to give a big thank you to our virtual conference sponsor, Accelerate, for helping us put together another fantastic event this year. I look forward to seeing you in our virtual environment, May 4th and 5th, at the Mortgage Innovators Conference. Back to you, Dustin.
All right, thanks, Susan. Now let's jump in the conversation. I'm excited to welcome in an old friend of the association, Greg Pettersen. Greg is Director of Technology at RWM Home Loans in San Diego. Welcome, Greg.
Dustin, thank you so much for having me. It's an honor to be a part of the Connect podcast. I myself am a huge fan. I've been following along since the beginning, so thank you for having me.
Oh, of course. We'll appreciate that. Yeah, Greg's, when I say an old friend, Greg was actually one of our former alumni of our Future Leaders program. He's been involved in our committees. I mean, he's just been a great partner and a great asset for our association. So excited to have him on the program today. And certainly, I mean, Greg's background, and we'll get to it here in a minute, but his background in both marketing and origination and technology, I think is just perfect for this conversation. So let's dive in here. So talk about your background for a minute, Greg. For those that don't know you, how did you get started in the business? What drew you to the marketing and the technology side of the business?
So the mortgage industry, as everybody knows, most people stumble into it. My story was very similar. So in college, I went to University of San Diego down here where I currently live, which is San Diego, and RWM Home Loans, the mortgage company I'm currently with, independent mortgage banker. We're based out of San Diego, but we're expanding throughout the country. The way I've got into the industry is I started actually in a real estate program at USD. So that program focused on the commercial side, and at that point in time, I was looking at joining an internship, right? Like every other college kid, your parents are pushing down, get that internship, you need a job, get off of our payroll, etc. So
Yep.
Yeah, I'm sure you have kids, they'll be there at some point. So I'm sure you're saving your pennies.
Absolutely.
So anyway, my start was I got involved with the real estate organization at USD, I should say. And one of the events we had, the CFO of RWM Home Loans, which at the time we were going by our corporate name, which is Residential Wholesale Mortgage Inc. A handful of years ago, we went through a rebrand and transitioned to RWM Home Loans. But at that point in time, I met the CFO, Laura Peffens, and she got me into the industry. I introduced myself. She said they were looking for interns, had no clue about the mortgage industry, and that was my dip in the water, and it's been incredible. But at that point, really what I knew about mortgage is my parents at the time growing up, they loved to refi and pull cash out of their house, and we would always be going on vacations, buying boats, you know, what else? Putting pools in the backyard. So I thought money grew on trees, and mortgages were a way to go tap into your money and your equity.
Yeah, well, that's interesting. I had no idea that that Laura got you into business. Laura Pettersen's an old friend of the association as well. She was actually on our board of directors at one point, so that's really fun to hear. So let's fast forward to the present here. I'm curious, what you know, if you've been in the industry now for a decade or so here, what's the transformation been like for you from your perspective, both as an originator and someone on the tech and marketing side of the business? What's that transformation in customer experience been like for you?
Yeah, no, that's actually a great thing to bring up. And I guess I could continue on my story a little bit because that kind of talks about the transition. So I started at RWM as an intern 8 years ago. And when I entered the business at that point, I came on in the operations side helping with our closing department. So I had no clue about customer experience. All I saw from my side was paper docs going everywhere, stacks of docs coming in. The DAX stocks were 140 pages long. There were a ton of stuff I've never heard of before, and terms for everything. It was wild, and I could only imagine what the consumer went through. You know, I was kind of going to school for real estate. You know, I knew a little bit, but I could only imagine what the consumer goes through and the confusion they go through, and they're going through all the documents, etc., and especially handling paper documents. So my jump in at RWM was on that side. I quickly saw a gap, like you said, in the customer experience side of the business, because at that point, I mean, I would go on our website, and a little bit of my background, I had a passion for building websites at that point in time, just a personal passion of mine. Small marketing projects I got into. I was always interested in like entrepreneurship and business and things like that. But I saw an opportunity that I went to our website, and it barely functioned. We barely could collect loan applications through it. And that was my exact first impression was, how are we doing business like this? The customer experience is just poor. And at that point in time, we started that was the first point in time that the company itself started looking in the direction of, okay, well, maybe we should focus on marketing, maybe we should focus on technology and consumer experience, because before that, we relied on our loan officers just to go out, forge relationships, take in a paper 1003, or maybe get some questions online, and that's about it.
Interesting. Yeah. Well, and I mean, I'm sure that was this, you know, a similar experience for everyone at a small to mid-sized IMB back in that time. I mean, with, you know, as you put it, a barely functioning website and not really much emphasis on the forward-facing customer engagement piece. So yeah, that's interesting. So what do you? Oh, go ahead.
Sorry, I was going to say, think about it too. I mean, so the industry had the huge transition in 2008, 2009. We finally got back on our feet. I'd probably call it 2010. So when I came in, you know, there was so much shift, people consolidating, companies opening, companies closing before that. So we didn't even have time to focus on technology, focus on marketing. It was more of, we're picking up the shambles from 2008, 2009. And I don't blame the company, because after that, then it was a refi boom. I mean, I remember when I came in 2013, the reason why they were even looking at hiring an intern is because their business was booming. So there was really just no time to even think about that stuff.
Yeah, it is interesting. You know, you talk to folks that it really does depend. Their early experience depends on what point in the cycle they came into the business. I started the California MBA in 2004, so it was right when things started really ramping up before the bubble burst there in 08. But I mean, I had similar experience. I'm like, wow, this is great. All these companies are growing like crazy and expanding. There's new companies popping up all the time. This must just be how it is all the time. And then you go through a down cycle and you realize, okay, well, there's the other side of this this cycle as well.
Yes.
So then what, from your perspective, then what's been the biggest improvement in customer experience in the last maybe 10 years or so?
Yeah, you know, that's a great question as well. So I think the biggest improvement has been the point of sale system and a lot of the automation systems that we've been implementing. So picking up at that point, we did start looking at, I mean, that was 7 years ago, 8 years ago now, we did start looking at how to collect more data online and send that through our loan origination system. Right around that same time, we changed LOSs. So there's a lot of tech transformation happening. And I know we moved over to Encompass, which is under ICE Technologies now. So that's really that's enabled us to plug into a lot of these third-party technologies and solutions to improve our consumer and borrower experience. But so starting at that time, by moving over to Encompass, it allowed us to pivot into a new website technology. At that time, it was called Lending Manager, and that really helped us dip our toe in the water. They're based off of the East Coast. I know they merged with a couple other companies, but Wayne Stiegel over there has been huge and really helpful. I know he's pretty known in the tech side of the industry and whatnot, but he was really helpful getting us off the ground and making sure our documents were flowing over to Encompass automatically, and our point of sale for collecting loan applications was seamlessly flowing over too. And they managed our whole website front end, and they made it really easy for us to take that next step. And before that, we had a CRM, but it was very basic. I mean, we weren't really utilizing it the way we should be. It was very cut and dry, just, hey, you send out very templated, corny email newsletters to people, and we would send those corny birthday emails. And I love birthday emails, but just don't make them corny and make them look like they're real. But it was so templated and so 1990s that it's just like, who's opening this? It's a CRM's meant to, the whole topic, provide a great consumer experience. I don't want to feel like I'm just put on a newsletter and given recipes I'm never going to make. And my email, as we know, between work and personal life nowadays, our email gets inundated. So I think it's always taking a step back and asking ourselves, what is that client experience like? If I was on the other side of the table, how would I perceive the marketing that we're sending out? How would I perceive the process, etc.? So if you're not putting yourself in that position, you need to be asking yourself those questions.
Yeah, interesting. Yeah, the 90s template that takes me back for sure. I mean, all that time I spent mastering Microsoft Publisher, just not exactly relevant. Not exactly relevant anymore.
You dated yourself, Dustin. Come on.
I thought you never think that the systems are going to be totally outdated soon. So dive right into it, make sure you know every little part of it, and then of course it goes away.
Yeah, and it's going faster. It's going faster and faster.
Yeah, no kidding. Well, let's look at the next decade here. Let's put on your or take out your crystal ball, if you will, and let's look in the next 10 years or so. Do you anticipate something that's more like a gradual, incremental, iterative change over the next 10 years, or are we going to have some of that and then maybe something seismic that within 5 years we're all going to be walking around with Google Glass and doing a mortgage as we walk to Starbucks?
Yeah, no, great question. And that, I think, to answer your question, I think it's rapidly, it's like a snowball, and the snowball is going downhill and it's going faster and faster. So without a doubt, I think the transformation is speeding up, and there are some incredible technologies that are now very accessible that have come out over the last 5 years that are now very accessible to everybody that are really going to change our industry. So I guess picking back up on the story timeline a little bit, with how fast things are moving. I remember when I came on to when we were starting to build up the marketing and technology side of RWM Home Loans, we switched over CRM systems. Like right now we're on Total Expert. That helped us a lot. Like I said, when I first came on, we switched LOSs, but that tech rollout and implementation stage and phase, it's getting faster and faster and faster, right? So a couple of years ago, we were looking at point of sale systems, and there were a ton of people in the industry rolling out the point of sale systems, a lot of companies. And I think it was one of your conferences, probably the first Mortgage Innovators Conference. Bill Dallas was on the stage, and he was pounding it in the audience that, hey, you need to be careful with the fruit flies coming up, because everybody's trying to get in and get a piece of the pie of different aspects of the mortgage industry. And when I heard that, I'm just like, you are so spot on. That's been our philosophy, is is trying to time that tech transformation at the right point, because you don't want to be ahead of the curve, right? And it's twofold. So you don't want to be ahead of the curve and choose somebody that's gonna not last. So now you've bet on the wrong horse. Now your horse is gone and you're forced to make a transfer. That's the worst place to be in, because you spent all that money, energy. It's all that opportunity cost. It's a sunken cost that's lost. Or you get on a good technology but too soon. So they might, like right now, we got on Simple Nexus last year, and I think it was the perfect time to get on Simple Nexus. They're an amazing solution, but you know, we've experienced it with technology. They're always rolling out improvements, and when you're on a technology, it's hard to embrace those rollouts real time, where when you jump on a new technology, you're automatically put on their latest and greatest version. So sometimes if you get on a technology too early, you start to fall behind of the updates. So that's something we're very cognizant about. But for consumer experience, kind of getting back to your topic, and where the industry is heading. So last year we rolled out Simple Nexus. We're already looking at a lot of RPA automation on our operations side. We're looking at e-close. So we have like 2 big technology rollouts going on at one time right now. We have e-close going on. You know, we just got out of IRLA, which is kind of forced upon us, a little bit of a transition, and now we're going into some automation and robotic process automation, OCR stuff. But so that side of the business is going to be incredible. I know Google just released, I think it's called like their Lend AI, or it's some, or Loan, anyway, some artificial intelligence OCR software that you could, as a lender, you could utilize that to manage your documents and whatnot. I haven't looked into it too much. I did a while back, but I mean, Google's starting to come in and make this technology accessible, and we have so much else that, you know, a lot of other technology that's out there. So going back to your initial question, I think it is going to be seismic. I think we're going to be able to embrace a lot of automation and logic and machine learning into our processes to speed up the process, which leads to customer experience, right? A lot of these big banks and other people are taking 60 to 90 days still to close on refinances. I mean, tell me that's a good customer experience. I mean, it's terrible. So if you could come out and still provide 30 days and close a purchase in 21, you know, I mean, that's going to be the goal, and the technology is finally here, and we haven't even scratched the surface of blockchain and decentralized finance and how that might affect our industry. So there's so many topics, and it's moving incredibly fast in many different directions. So it's a lot to keep up on, but everybody definitely needs to stay in the loop, and these podcasts are great for that.
Yeah, I think it's interesting that, and I was just thinking when you're talking about how you guys have multiple tech solutions you're bringing on at the same time. And I mean, what, 5-10 years ago, that one of those alone would have taken, you know, the resources and full attention to the entire company. Now, like you said, I mean, things are moving so fast, you're onboarding multiple systems at the same time. What's that been like?
It's a lot. It's a lot. I mean, for e-close, we had to delay it a little bit because of IRLA, because I mean, resources plus origination and everything coming in is very busy, maintaining current platforms, current systems. I mean, spot on, it's a lot, but you have to stay organized and put your team around each project and bring in the stakeholders at the company. So for us, like, I can't do it alone. We have third parties that we could reach out to help us with different Encompass coding. We have our implementation teams at the companies we're bringing on. Thankfully for e-close, we are using the Simple Nexus solution, so we're already plugged in, so the heavy lifting was already done. It's just bringing in our closing team, making sure they have capacity to help test and make the proper decisions for logic of docs, etc. But I mean, spot on. You have to space them out a little bit. Some of our OCR and automated process, or our robotic process automation stuff, we had to delay that to May just to catch our breath a little bit and make sure all of our current rollouts are going smooth. So it's just continue to build out the teams and investing in where you're going. So
innovation never stops, my friend.
Yes.
What from your perspective, just getting back to customer experience, What's the biggest pain point you see right now for potential home buyers?
Yeah, I think the biggest pain point for current potential home buyers is simply education. That's just educating them what's out there. So a lot of home buyers and millennial, I'm a millennial myself, so it's understanding what the market. I mean, the market is fierce right now. So I would say right now the biggest pain point is twofold: it's education and helping them navigate the chaotic nature of our current real estate environment. I mean, these poor home buyers in California in a lot of areas, they're going in. I had a millennial borrower that's 29 that just purchased $1 million place up in the Bay Area, and they had to go 10% over ask. So helping buyers understand the history of the housing market, what it means for renting versus buying, what is the tax benefit, what does it look like in the current environment to get your offer accepted and be competitive. I mean, the last thing you want to do is find a property that you love and you lose out on that property. So making sure they're aware of, hey, it's extremely competitive. Let's get you fully pre-approved, your money set aside, and if you can offer over ask, it might be a situation where we have to go that route if you really want this property. So I mean the highly sought after properties are all going minimum 5 to 10% over asking, and it's wild. So I'd say just educating and preparing home buyers for how to save up the money and get into a place to buy. So that's the first half, and second half, the state of the current market.
Yeah, and I think you make a good point there, and I think this is something that, you know, we see. It seems like it comes in cycles too. It's like every 6 months we see an article, and whether it's Housing Wire or somewhere else, is this the death of the loan officer? Is this technology the death of the loan officer? Our loan officers getting phased out? I think what you just said with education, that right there, that is why the loan officer is not going to get, phased out, because there's a huge role in education, and especially almost the more information and data that's available for consumers. In part, it's harder to your point, to sift through that and figure out what am I actually supposed to do with this. And then you hear from friends that, well, I sold my house and I had 30 offers the first day, and someone bought it sight unseen. What does that look like? And your point about offering over market, I mean, it's a complicated process, and no amount of data and information that they can get from a Zillow or Redfin can really prepare you for the process itself.
I was gonna say, I want to touch on your comment about the phasing out of the loan officer or their perception around automating that job. And yeah, I think where technology is going, there's going to be a market for both routes. But I, like you said, I do see consumers still needing that educational process, that hand-holding. They want somebody to call, and it's tough. Like for a purchase, 100% they're going to want to work with a loan officer, in my opinion. Now those lines, I know there's a lot of companies coming out where they're the brokerages that also do loans. You're seeing the Zillows get into the mortgage industry, and Redfin as well, and a ton of others. So it's going to be fascinating to see how all that shakes out. But that's one side of the token, where it's the hybrid model. There's the full-on automation, kind of online bank rate. You go check a rate, you can click a button, upload your docs. That's more of the refi model. But it's always interesting. You see these pop up, or you see these companies pop up randomly. Like I know last year there was an organization locally here in California, I'm not going to name, but they got really popular and they were buying up the market, the advertising everywhere you turn. We lost some deals to them because they were pricing way under market for their rates. I mean, they're trying to go the Silicon Valley model, which is don't make any money on the loans, just get the clients in the door, then eventually you can make money somehow. And I don't know for sure, but I haven't seen their name anywhere. I haven't seen their ads anywhere. They used to be all over the newspaper, all over TV, all over the radio, and they vanished. I wouldn't be surprised if they went under with all the margin calls last year that we were hit with. That thankfully the strong were able to survive. But it's case in point. I mean, similar to the tech side, you have the fruit flies. On the mortgage side, we have the fruit flies as well. Every time there's a refi boom, you're going to get people jumping in and trying to undercut everybody and buy up the business, and you always see them go away. Same thing for a lot of these online models. So I definitely see technology helping support the strong loan officers. I think there will be a phase out of loan officers that aren't keeping current with their professionalism, their knowledge of the industry, etc. So I think technology helps us allow our good loan officers to focus on doing good business and more volume. But I mean, my perception is I don't see the loan officer going away, and that's not our business model. Our business model is to empower and grow our loan officers to help make their jobs easier and to bring more business and more commission in their pocket.
Yeah, no, I totally agree. And I think you're right about it being in almost the current environment and the environment in the future. It demands more of a loan officer, but it makes that loan officer even more indispensable than they've ever been, maybe. So you mentioned the refis here, and let's question for you: how is your strategy shifting as we see maybe the end of the refi boom at some point later this year, maybe, or maybe even in next year, and the return of a more purchase-focused market? What's going on with your strategy there?
Yeah, definitely. So we've always been client for life focused, which really helps. I mean, so that's a great question you have, because RWM is historically a big refinance shop, but our team and our originators, so we've been recruiting a lot of amazing purchase originators in key markets. So step one was building out our amazing platform. So the company culture, our operations team, our technology, our marketing. So now I would say we've built kind of the holy grail of an IMB mortgage platform a loan officer could be proud to be a part of. So now it makes our job a lot easier when we do go and we do try to transition to purchase business and support these purchase loan originators, because everything we've done and we've built on over the last 3 to 4 years has been purchase focused. For example, Simple Nexus, a big reason we chose them is because you can have partners on the app and they could get access, they could track loan status and everything like that. On the flip side, with Total Expert, we have automations going out to the listing agent and the buyer's agent, letting them know every step of the process, what's going on. They love that. We're working on some other things as well. We really push those annual loan reviews, which, going back to the last topic we just covered, is it takes a loan officer to stay in touch with a client and do their annual loan reviews, check in, how are you doing, is your house the right size, especially with COVID now. A lot of people want to get into larger places, they're working from home. So for us, it's really focusing on that consumer and that client experience always, and doing an amazing job so we can ask for those referrals, work with those strategic partners, and attract those really strong purchase loan originators. So that's kind of been where we're going, and making sure all of our technology is set up to go that way as well.
Makes sense, yeah. Well, we've got just a couple more minutes here, but I'm curious. You talked about at the outset when you're talking about your background and you're focusing in college in the real estate program there at University of San Diego. I'm curious. I mean, you kind of mentioned that you kind of fell into it, but compared to a lot of folks in the industry, you were preparing for a long time before you even started at RWM. You were preparing for that mortgage banking background. I mean, there's plenty of people who who really do kind of fall into the industry and weren't aspiring to real estate or mortgage anything in college. So I think you're in a unique position to answer this. What advice would you have for mortgage lenders to help the industry better reach out to and get young people interested in the real estate finance industry at a younger age?
Yeah, no, definitely, Dustin. And that's something that's so important in our industry. And once again, 4 or 5 years ago, RWM, or probably longer than that, they were so focused on bringing up the next generation and the younger generation into our industry. And it was tough before that. Like, I had a negative connotation for mortgage too, because I was told on the news that brought down our economy in 2008. I saw my parents lose one of their investment properties, and it was, well, they didn't lose it, I guess. They lost a ton of money on it, but it was tough. It's like mortgage, and then you hear everybody, you get in, you're not confident about the mortgage industry because it goes up and down, and you could have a great year and then you could be destitute the next year, and it's all over the place. And I'm very thankful that, since 2009, the mortgage industry has been booming for the most part. There's a couple slower years in there, but it's been great. But to focus on bringing on the new generation, It's educating them about what opportunities are out there. And it blew my mind. And I love the mortgage industry because it covers on every aspect of business and really so many parts of the economy. During COVID last year, I would argue that the mortgage industry really is what kept a lot of people above water and their head above water with refinancing. I mean, I was saving clients I originate as well. I was saving clients $400, $500 a month on loans. They were doing cash out mortgages, consolidate debt, the forbearance stuff and not having to pay their mortgage for a specific period of time. I mean, these are game-changing things that immediately help the general public's bottom line on a month-to-month cash flow basis. So it's been incredible, and all that business coming through the system with these mortgage companies. Now they're hiring, and that has a ripple effect to appraisal, title, escrow, every part. So when jobs are being lost, a lot of jobs are being created because of our industry. So going back to that, I'm getting off on a tangent here. But going back to your question about how do we get younger people involved at the college level, it's simply education, letting them know what's out there, starting within your organizations. If you have the power to do it, hire a young intern to start that marketing department or start that technology department, or staying abreast of the movement in the industry, or bringing them into these conferences that the CMBA puts on. I mean, how I got started is right from the beginning, the owners of our company were so gracious to include me on high-level conversations about what's going on at the company and what's going on in the industry. They helped bring me into the Future Leaders program, and that helped. So being active and investing in these younger people and taking those risks and betting on those people, I think, are huge. And going out to these college campuses, they all have job fairs, getting involved in these real estate organizations at these colleges. These real estate programs, a lot of them have entrepreneurship clubs or real estate clubs. So go there, give a seminar, do like a roundtable event on the industry and the opportunities. But once again, it all comes down to knowledge. I had no idea the opportunities that were out there in this industry. I mean, you have everything from post-close to servicing to the secondary Wall Street side. I loved Wall Street before I started getting the mortgage. I was big into stocks. I thought I want to go the stockbroker, stock market route. But there's just so many pieces. I mean, HR departments are huge. You have the operations side, which is manufacturing the loans. We have accounting departments, right? So I mean, it touches on every level of business, and getting out there in these business schools and teaching people the opportunities, I think, is key and very important.
Yeah, well, I think you make a great point on the at the outset of that answer there, where you talked about the ways that mortgage bankers make a difference in people's lives, and I think especially for the millennials, Gen Zs, what have you, that every poll you see, every statistic you see, care more than ever, more than any other generation, about the values that their company that they want to join or do business with or be a part of. I think that bringing that message out, because I think you're right that a lot of people just don't realize the opportunity that are available. Maybe they have a bad perception of mortgage bankers. They think of Wall Street and they see headlines, they remember what happened to their parents maybe, or older siblings, and bad experiences there, and they just don't realize the good things that mortgage bankers are doing right now to help people, like you said, save hundreds of dollars every month, stay in their homes during times like this past year. And so I think you make a great point there.
Excellent.
So final question for us here. And again, you've been a great supporter of the California MBA for a number of years, and so has RWM, of course. And so question to you, why is it important for lenders and younger folks in the industry like yourself at these companies to support groups like the California MBA and the National MBA and some of the other groups that do that advocate on behalf of the industry?
Great question. I think advocacy is so important. If you look at the power of the real estate industry as a whole, I mean, how influential National Association of Realtors has been with kind of directing the script and making sure they have their constituents' best interest in mind, and they're really supporting them. We've never really had, as of late, you guys do an amazing job, but before, more recently, I would argue that we've never had that big of a lobbying group or a powerful representative for the mortgage banking and the mortgage industry as a whole. So organizations like California MBA and the MBA as well are so crucial for driving the future of our industry, making sure that different rules and regulations that these lawmakers don't understand how it affects our industry, they don't understand how it's going to affect the general public, that we have that voice in Capitol Hill and up in Sacramento. It's imperative. It's like tithing, right? We should be tithing in the industry. We should be tithing to our local organizations and our advocacy groups, because without them, we don't want to have our head up focusing on all this stuff. We want to be able to have our head down, focus on growing our business, making sure that we can run sustainable businesses, not worrying about all these different bills that Joe Schmo over there thought was a hot idea, and they don't understand really the ripple effect it's going to have for everybody. So you all have been incredibly amazing, and not only from the advocacy side, the education side. I would definitely not be where I am today without the California MBA, the Future Leaders Program, all the events I attend. I try to attend almost every event possible. Hopefully I'll hit all 3 this year with CMBA, but no, it's been wonderful. You all are doing a great job, and it's the way we push our organization, our not organization, but our industry forward.
Yeah, no, I appreciate that, Greg. And just for, I love the tithing example, but I'll just point out that your membership dues are not 10% of your volume or your revenue or anything like that. So it's significantly less than that.
But they should be. What? I mean, you're.
Your lips.
Yeah.
Well, hey, Greg, really appreciate the conversation. I know we could go on longer here. This has been real fun to catch up with you, but we've got to head out. But thanks again for joining us here on Connect.
Excellent. Thank you, Dustin. Thanks again for having me, and I appreciate all the great things you guys are doing. I'm excited for this year, and make sure everybody attends the Mortgage Innovators Conference, because I'm a committee member, and it's going to be a great event, so we'll see you there.
Absolutely. May 4th and 5th, right? All right.
Yes.
Well, and if you enjoyed the conversation here, then make sure and subscribe to us on our YouTube channel. You can also follow us on SoundCloud, Spotify, and Apple Podcasts. And we'll be back again next week for our next episode of Connect, but also the last episode of our focus on customer experience. So we'll see you then.